Hi, welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the weekend of July 15, 2015, we saw widespread, though not serious, outflows across all asset classes among mutual funds. Meanwhile, ETF investors took a very different view of the market. They actually allocated across the board into their products. Let's take a look at mutual fund macro groups and see how it all shook out. Starting off at the top, equity mutual funds had $4.4 billion in outflows. Taxable bond funds followed with about $400 plus million in outflows. Municipal debt funds had about $100 million in outflows, and money market funds had the lion's share of outflows, about $9.4 billion pulled from them. Well, this week saw a lot of interesting news. Certainly at the top of the market's concern was what was going on in Greece. The government there has acceded to demands from its creditors to implement some austerity measures meant to shore up the country's finances, though most people think this is just another way to kick the can down the road for another year or so until things start to heat up again. We also saw China's stock market finally find a little bit of footing. It was in free fall for the last couple of weeks as a lot of investors over there, especially on the retail side, are very leveraged, and the Chinese authorities are trying to stop the free fall as people are getting out of the market because there's simply too much leverage going on, and no one wants to be left holding a bag. So between those two events, we saw the bulk of the activity or the concern in investors' eyes over the last week or so. And of course, with a little bit of economic news out there, it seems to be indicating that the U.S. economy is still in good shape, while the global economy still on shaky footing. So let's take a look at equity mutual funds and see where investors, what they did with their money this week. As I said, $4.4 billion pulled out of them. We actually had a decent week in the market. It was up about 3%. So you'd think that if people were truly performance chasing that they would have gotten back in. That didn't happen. Still a little bit of drama from Greece and China to hold them over for a little while and help them rethink what their equity mutual funds ought to be doing. The Dow Jones, however, is over 18,000 once again. It hadn't seen that in about the last 3 weeks or so, again, reflecting concerns in the market about Greece, China, and a few other areas. Overall, domestic mutual funds saw the bulk of the outflows, about $2.9 billion pulled from them. But international funds, or the non-domestics, they also had outflows. This has been unusual. They had about $1.5 billion this past week. Most of the time this year, we have seen outflows from domestic mutual funds, while international saw inflows. That didn't happen this week, again, reflecting concerns past our borders. We also saw the biggest outflows this week at a classification level occur with equity income funds. They saw outflows about $1.6 billion, and alternative managed future mutual funds actually saw some decent inflows, about $140 million to lead alternatives this week. Small cap growth was one of the better stories as well. Here they took in about $359 million on the week. So not too many sources of inflows. Most of the investors' activity this week was focused on pulling money out or reallocating it somewhere else. Well, the next group to take a look at is equity ETF. And again, they had a very different view of what was going on in the market. Perhaps they saw it as a buying opportunity, although they weren't taking a whole lot of risk this week, rather risk-neutral trades in my view. We saw SPY taking about $4.4 billion, IWM, the Russell 2000, it took in about $1.5 billion. QQQ finally showed up on our leaderboard, had inflows of about $475 million. At the bottom, investors were definitely looking twice at financial services products. The XLF saw about $1.5 billion in outflows, pretty big outflow week for that product. The EFA, the EFA product, it had $975 million in outflows, again reflecting concerns about overseas markets. But EEM, the emerging market product from Spider, also had outflows $647 million this week. So usually investors are taking two different views of the world. This time, the ETF investor said it was a good time to buy, but only domestically. So we kind of got an interesting dichotomy this week. Next group to take a look at, taxable bond mutual funds. Again, 420 and change or so in outflows, not too bad for them. Treasury yields were up this week, so investors are again concerned that the Fed will raise rates in September, that being probably the majority view right now. But investors don't seem to be too worried anymore about high yield. They actually had outflows this week, $273 million, not so bad after last week's sell-off. Core had inflows this week, about $234 million, which is very light for a product that often gets a lot of investor attention just because it's so much of the typical investors' allocation. The last group in taxable mutual funds, loan funds that we'll talk about, they had $3 million in outflows this week. That's obviously very little. And I think it reflects that we've seen the last of the big selling from loan mutual fund investors, but we don't see anybody standing in line to get in. So right now it's kind of in purgatory where investors really don't know where the loan market is going. Not too many reasons to get excited about it, but then not too many reasons to sell it either. So investors are standing pat on their loan participation funds. Well, taxable ETF investors had, again, a very different view than mutual fund investors. They put money to work this week in bond funds, about $2.2 billion total. They've had inflows for 3 out of the past 4 weeks, so you're more active and engaged investors finding some values in the fixed income side. High yield funds took in about $1.5 billion, the bulk of that between HYG at $1 billion and JNK at $420 million. That's where most of the activity was for the entire fixed income market. We saw some outflows in emerging market debt and some currency products. Again, like the mutual fund side, concerns about what's going on outside the U.S. are weighing on investors' minds. Well, the next group to look at is municipal debt funds. They are starting to come around. We've still seen another week of inflows. This is the 11th week of outflows for this group. Sorry, we're still concerned about outflows here. But the outflow this week was very light. What did it come to? Like about 75 to $100 million. Not a whole lot. It's the lightest outflow that we've seen since outflows began 11 weeks ago. High yield muni funds had outflows of just $28 million, very light, while national munis saw net inflows of $5 million. Both very light, and I think both, just like loan funds, reflect investors standing on the sidelines with their hands in their pockets, not really sure where the market's going, so they're not going to make a decision to buy or to sell for the time being. So we'll have to keep our eyes on this. Potential exists for inflows to return to munis over the next week or two if things don't get any more crazy in the treasury market. That might be pretty supportive for muni investors going forward. Final group to take a look at is money market funds. Again, they had the bulk of this week's outflows, $9.4 billion withdrawn from them. Institutions making up the vast majority of those outflows at $9.3 billion in outflows. Retail investors made up the balance, about $99 to $100 million in outflows to make up the rest. Well, that'll do it for this week's episode of Fund Flows Insight. Join us online at lipperusfundflows.com or join us here next week where another analyst will take a look at flows in mutual funds and ETFs. Thanks for watching.